Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While the global markets prepare for the stream of PMIs and CPIs being released tomorrow, along with the Fed and BOJ meeting, we bring your attention back to India. Now, Rupee, which has been constantly trading weaker, provided another clue regarding its moves. The November trade deficit shot up to $37.84 billion, with import rising month on month while exports fell. Good morning, JK. How are you reading the trade deficit numbers, and how do you think the INR is going to react going forward?
Hey, good morning, Swaraj. I would say it's very shocking uh, because almost $10 billion rise in the trade deficit month on month is very high. And while I can understand imports going up by three billion, and in fact that can be seen as a good sign because if imports are increasing, that means the domestic demand is also improving. But then the exports falling by 7 billion was quite disappointing. Although the ministry has come out and said that the exports have fallen because of the fall in the petroleum prices, and the related export realizations have been lower, and they are expecting it to improve in the coming months. Yes, this number cannot be ignored by the market. Already we had a reaction to in the rupee, which touched 84.90 in the domestic market itself yesterday, and yuan's fresh weakness and the overall dollar bid did not help also. So I would think that 85 beckons rupee very soon. What will happen further from here depends on whether the authorities want to let the rupee fall more substantially to support the exports, maybe in the new year, in which case our targets need to be revisited. Also, the overall dollar pullback due to year-end adjustments and stressed positions, that is only not going to help the rupee as well. So overall, my assessment is that rupee will continue to be under pressure. Whether it will move at a faster pace or not depends on how the authorities, want to react to these numbers. On the US side, coming back to PMIs, the PMIs actually were declared yesterday itself. In fact, India PMI improved both on manufacturing and services. These are the flash PMIs for the month of December. And even the composite number was very good. That was a good news from Indian point of view. Even the Indian WPI also fell marginally, in the month of November because of food prices moderating quite a bit, and hopefully this continues and has its downward pressure on the CPI as well. On the global side, US data manufacturing continues to struggle as per both PMI survey and another regional survey. However, the services PMI posted the highest level since October 2021. And of course, we have another set of important macro data today with most focus on retail sales for November, because consumption is very important for US economy and the GDP. Industrial production is also due. Consensus for both the forecasts, show an improvement. Now, even as Fed starts its two-day deliberations today, market has discounted almost 95% probability of a cut by 0.25%. But all focus will be on Fed statement and the dot plot. Most market also expect Fed to indicate a slower pace of rate cuts next year, subject to, of course, 2.0. Most of the analysts expect not more than 0.5% cut next year at best. And that apart, yesterday Nasdaq made history by hitting a new all-time high and recorded a 34% return for the year. Yields were choppy, but were overall bid. For a change, the PMI indices were better both in Europe and UK. Part of the reason why both the currencies have improved, but no such improvement was seen in either yen or yuan. Yuan is hit by the fact that the Chinese central bank is very likely to cut rates again. We have seen their macro data, including inflation, actually once again showing a falling trend. So I think they have already been saying about a fresh stimulus for the economy, and that is actually going to come in the form of some rate cut. The yields in China are already falling, and the difference in yield between US and China actually supports USD yuan to move higher, and it is trading much closer to 7.30 right now. Also, not helping China yuan is a reported 45 billion of outflow from Chinese stock market in the month of October. Yen, of course, after market is more and more convinced that BOJ will leave the policy rate unchanged at their December 19 meeting, I think we have seen it cross even 154. But probably these are levels where even BOJ officials will be quite concerned about the currency fall. Because that can actually impact imported good prices and the consumption. So you will probably see a cap near 155, irrespective of Fed decision and also the BOJ decisions as well. Now, in the staying with global market, I think the political troubles are spreading in other countries as well. Now, yesterday we had the Canadian finance minister quit, and in fact, he has called on the PM Trudeau also to quit. And he says that party would vote against the Liberal government in the confidence motion early next year if the PM does not quit. So we already had similar troubles in Germany, France, and of course South Korea close by to India as well. Before that, we had a snap election in Japan. So all over, I think it's not just the geopolitics, even the domestic politics everywhere is seemingly not stable. And I mean, if you look at it, Trump coming with a strong majority in US is quite a contrast to what we have had in many other regions in the recent past. So I think everyone that gives a lot of support to the US dollar stability, and I think dollar strength is not just merely based on their economic exceptionalism, but also due to the stability which is seen politically also, and on the policies. Of course, we of course wait for how the policies play out in the coming month. After Fed meeting and two other important meetings that we have in this week, markets can slip into a slow motion, but probably activity will pick up from the second week of January, much closer to the time when Trump will assume office. Till then, have a good trading. Thank you.
Thank you, JK. And just quickly summarizing the trade deficit number, which was $10 billion higher month on month, because we saw imports go up by around 3 billion, and then exports also fell by 7 billion. Now the government says that it's because of the fall in petroleum prices and thus impacting the realization on petroleum exports. Other than that, Indian PMI improved for December. WPI inflation also fell marginally due to moderating in food prices, which is good because it might cascade into a lower inflation CPI for us. In the global markets, US manufacturing PMI was slightly weaker, but then the services PMI was really strong. In fact, highest since 2021. Retail sales and industrial production in the US is also expected to show some strength. When it comes to markets, Nasdaq hit all-time highs. Dollar remains very strong, especially against the Asian currencies, because yuan is also trading weaker against the dollar as inflation remains weak, and the outflows in equities and lack of concrete stimulus measures keep things uncertain for the investors. And as JK mentioned, there's a lot of political uncertainty going around, whether it is what happened in South Korea, now what happened in Germany, which is being called into an early election, and what's happening in Canada. So, as JK mentioned, not just the economic exceptionalism, but also the political exceptionalism with a strong majority, which is giving investors some confidence about the US economy. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.